This is Justin Pulitzer. This is my weekend video for the week ending October 12th, 2014. We've had a quite tumultuous couple of weeks in the markets, and I'm going to dive right in and try and make some sense of it for you guys. I had discussed that here we had a Chinese liquidity event that took us up into this, past into this downtrend line. And then we had a bit of a doji at the top of the range here as a Fed day. And I had said above this high or below this low was going to be the key. And we had a bit of a look above the range and then a complete, I wouldn't say collapse, but a very precipitous decline here after that level had broken. And you can see we had a bit of a rally this day. I had played long. This was actually a really big short squeeze day. And it stopped right at the low of that day. And then we had this really big take back bar. This was a little bit more than I actually had been looking for, although it is what it is. It took out the 50 MA. We kind of tried to rally back up, couldn't do it, came back down to a low, had this excess low here, which really should have been the end of the auction, and we rallied back up to this downtrend and retested the 50, which I said was a mechanical short. We did have a bit of more of a pullback here again than I had thought was likely, although that wound up working out well. We wound up having this big rally. It looked like this was kind of coming to a close here. We had a double bottom, this big engulfing pattern, although we did stop right shy of the downtrend. And you can see we came down again pretty precipitously. I had said any break of these double bottoms would probably be a free fall in the markets down to this breakout zone, and that's exactly what happened. So what now? We're right about at the 200 MA. We're at this breakout zone, which is important. You have a pickup in some volume. The stochastics are kind of near the lows. I'm thinking that there is maybe a little bit more downside, but I'm thinking bounce kind of soon. I'd be looking to buy somewhere in this breakout zone for a right or right out trade. If we lose it, then I think we probably could come a little bit more mid-range here, probably into the 87, somewhere between the 87s and 85 area. There's, as you can see, some price congestion here, and this was, the zone that we broke out of. And I would think that somewhere mid-range here, price probably decides to catch itself if there is a bit of an extension past this breakout zone, and price does accelerate through there. I would think that mid-range here is probably another good spot. So it's probably a right or right out here. If not, look for to kind of regroup around here. If that does happen, there's something remarkable that has happened, that we now made a lower low. Here it's still an equal low, so it wouldn't be really too much of game change. But if we did come through there, I would think that the rallies probably decide to get are shortable. Probably if we came down mid-zone, then somewhere in this breakout area, breakdown area. Really, it is actually a breakout. A break in direction of price is considered a breakout, but I always say breakdown. Anyway, any breakdown of this here, I would think a bounce up into that area is probably shortable. So we'll have to see. If we do happen to, I don't want to only talk about downside. It's very possible that there is some upside here. Any sell-off in this market has proven to be, buy the dip, so to speak. So let's discuss some upside. If we took out this down day, we sort of tried we sort of tried a bit of a bounce and then collapsed. Anything over this bar, you can see I have my alert set, I think could be a bit of a rally up a little bit higher to the downtrend line. That's really the more safer place, in my opinion, to short rather than pressing lows at support. I'd rather try and short on some strength into the downtrend. If we get above this downtrend, I think it's very possible that we can set up possibly a head and shoulders type of a pattern, where we then come back down here, and then that I would not say is a buy. I would say that the zone is probably going to be very heavy. But let's see what happens. This took a while to build out. Maybe into the year end we get some type of a bounce that kind of goes sideways and then comes down. It's also very possible that we come back up and retest these highs if we get over this downtrend line and kind of fill up the triangle that way. I'd say that that's probably going to be a little bit tough with the bulls, just with this tone change and the, reintroduction of volatility into the market. You can, I'm sure you guys can see on your own charts that the VIX is up high. It's really been challenging the low 20s level, which is really kind of where it needs to stop. Anything above anything to 20 to 22 is sort of, a little bit of a caution zone. And anything above 22, like into 25, is a little bit really more of a caution zone. Then you start putting, deeper correction type of volatility on the table. So let's just see how that plays out. I don't want to anticipate too much, but this is what I'm looking at. If we go out on in the cash index a little bit further, I want to give you some perspective. I know this chart might look a little bit muddy just because I have a lot of stuff on it. Let's go even a little further. Let's go 5 years. If you take a look, we've been in this defined channel to the upside, where this channel low has been some support, and then we've had sort of a bit of a uptrend, or a channel within a channel, so to speak. And you can see, if we zoom in, the channel within a channel has kind of given, and it is very possible that we can work our way down to this lower part of the channel. I don't know if it's going to be a straight line like this. I would think it's probably a little bit more bumpy, but there could be some support if we get down into the it could come down into the 1800s. It's very possible to have a bit more of a steep correction than we've been used to, and maybe test these reference lows. I'm not necessarily calling for that just yet, because we still have these lows to contend with in this breakout zone. So it's possible we come back up and then come back down. But I mean, at some point that channel bottom is probably going to get tested. Whether it's here or up here, or maybe into the future, is another story. But this is still very typical price action. It's just been a little bit of time since we've seen anything that's been a little bit more of a correction. I'm a little bit more optimistic, I think, than everybody else. I always like to think of, I wouldn't say optimistic, but I would say open-minded. I'm a little bit more open-minded. We are mid-channel here. Mid-channel is usually a sort of a point to consider. We do have this. It's been a really long time since we've had a 200-day moving average test. I mean, you could take a look. I mean, geez, take a look at. I mean, it was back in here. In what is this, 2011 or 12 back here? Yeah, I mean, it's been a really long time. Here we actually did violate it and did get to the channel low, though. So keep that in mind, although this was a little bit closer to the channel low than we are here. But we did spend a little bit of time below the 200 MA, probably flushed out some weak hands here, and then it kind of powered back up. Had a little bit of stalling action around the 50, which is, I guess, to be expected, and then, we kind of resumed the bull trend back up. So just keep these things in mind. A violation of the 200 MA isn't the end of the world. It's been a really long time since we had a test of it. Maybe we do see that hold, but if not, it is very conceivable that we do have a move down to this lower part of the this big dominant channel, and still be bullish, which is incredible, right? You could have this big precipitous decline of maybe 200 something points in the S&P and still be in a bull trend. So I guess that shows you just how far we've come, right? Let's take a look at the IWM. That I had been talking about as a short on a break. Wow, let's zoom in. I guess my time frame here is still too long. Here we go. I had discussed this being a play either above this descending trend line to fill up the triangle this way, or on a break here to fill up the triangle this way. And you can see we had a bit of a bounce. It was a little bit weaker up to where this breakdown had been, and we have now been coming down. My thought with IWM is that it obviously it's still showing the relative weakness. As long as it's showing the relative weakness, it's going to continue being weak. That's just sort of how the market works, right? Strength begets strength, weakness begets more weakness. We are, however, coming into a secondary trend line, a gap fill here in the 103s, a prior congestion area, and usually what happens is if you have a snap of a support zone, it gets retested. I don't know how much further we're going to come down. Maybe we do have to come down to the 100 area here, and then we have some type of a violent short covering rally or a violent snapback here, and then roll over again, or maybe we accept higher and then come up to the primary downtrend line. These are all very possible things. These are all areas that matter. Personally, it's not my style to press lows. Like, I wouldn't be in here first initiating shorts on a Friday looking for further breakdown. I would rather see some type of a rally back to this butt breakdown point. You can see it worked out well here. We rallied from this breakdown to this breakdown and then backed off. So I would feel more comfortable playing I guess, to this 107.44 to 108 area. If we can get into there, I would be looking for a right or right out initiation of shorts. It's just my personal preference. I usually like to kind of have a bit of a running start. I don't like to kind of just be jumping late into the game. So that's my thoughts on IWM. The diamonds have. I gotta change this time frame. This is just driving me nuts. Let's go to 9 months daily. The diamonds, you can see, have taken out this breakout zone a little bit, but we have come into a bit of a trend line here, and that coincides with the other markets. But if this is lost, there's probably a little bit more room down here to test these lows, fill up the triangle that way. And if there's still even some more lows there, maybe we want to come and test out these reference lows to fill it up all the way down here. That is very possible. I would probably be looking to do that more on a bounce again rather than pressing lows. Again, that's just my style. Some people do play for these breakdowns, and they catch it successfully. For me, I just like to have better trade entry with into some strength. So I'm kind of not. It's like sort of buying the top, hoping for higher. I don't like to really play that, but I don't like to buy the bottom, hoping for lower. It's like I said again, very possible we're going to fill this up if this snaps. That's probably to me more playable than for me, for the people initiating on Friday, kind of with the hope. Let's take a look at some of the momentum names. Apple, for example, has been the poster boy for relative strength, although the weakness in the broad tape on Thursday and Friday, I guess, kind of made it a little bit hard for it. It was kind of testing above this downtrend line. It's just really been a bit of a bull flag here. The last time we got to these levels, Apple had a really precipitous pullback. It topped on the iPhone 5 launch and just never looked back. It was just a complete free fall. That has not been the case here. So my thinking is Apple is still showing some bit of a bullish tendencies. The market has pulled back, and Apple has kind of just been hanging out around these highs, within a few points. If you're really short term, the 20 MA is really the litmus test, in my opinion, for bullish stocks. Anything below there, it starts getting a little bit more bearish. I had discussed this being an initiation of a long. I had got into the trade once we took out this body here, and it was a bit off to the races. For me, what's important was this old high, this 99.44, but really now what's important is this channel that we've been in. If that's lost, I think that there's room possibly down to retest these lows in the 96 and maybe into the fib of 95. So let's just keep an eye on this channel this week. That's really, to me, what matters. We are building out some time here. What's interesting about that is the earnings are coming up, and the more we kind of chop sideways, the higher the upper part of the channel becomes. And if that happens to be good, like if I haven't really wanted Apple to take off too much before the earnings, just because the move, in my opinion, then would have happened. A little weakness is actually probably better for it, just to shake out, the late hands and the chasers, and maybe that sets up for a move to retest this old high, and then maybe even there fill up the triangle to get up to some new highs. But let's see. I want to just see how the market handles itself and how we are. We still have a little bit of time ahead of the earnings, so let's let that play out a little bit. Although I do think the relative strength in Apple has been notable. I mean, that's just the fact. It has been. Facebook has been a stock I have been bullish on for a very long time. I did discuss in my midweek video that there was this wound up, I said, closing okay. But I didn't like that the 50 MA here had been support for a while, and we kind of violated it a little bit more than we had in the past, although we had closed well. And I had discussed being over this area here, this 78.06, to me, feeling a little bit more comfortable long. And we did have some more weakness in Facebook, and I had discussed it coming down into these trends. So now we're down here. I would say that it's probably a good idea to maybe play by the dip a bit for right or right out. I mean, the risk reward is very defined. If we lose this area, I'll start changing my opinion a little bit more about Facebook and looking for it to be more of a buy lower. Although you can see we have 100 MA, we have a secondary and a primary trend coming in. I would say that probably Facebook got a little bit extended here. Breakdowns like to be retested, so maybe we do wind up coming back up into this area. If we can take out the high of this dump bar, this 76.50, I would say that the sellers are probably out of the stock and the name gets a little bit more healthy. So just set those alerts. As you can see, I have mine set. But this area here is really key, and let's see how that plays out this week. Twitter had also been a bastion of relative strength in the market. I think Friday they just came for everything. You see you had a bit of a doji at the top of a range for shorts to shoot against, and they took it back mid range. I mean, look where we still are though. We're right around the that previous breakdown in the IPL level, really just mid range in Twitter if you take a look. So this was pretty nasty. I think this was like about a 9% or so move down. But again, we have a 50 MA coming up, and we have some really important reference areas. I've said with Twitter, anything above 48 is bullish, anything above 50 is more bullish, and anything above 52 is really bullish. We're back to 50, so it's just kind of, it's just a little bit more bullish. It's not, it's probably taken out a lot of the late chasers. I would be a little bit cautious though. If we start losing these areas, there is room down to the primary trend line. Maybe that's a better thing to have happened before earnings than coming in on the highs. I always think that. That's the case for another big momentum stock, Google, which I think has really been hurt by hedge fund liquidations that have been playing. This is speculative again. I don't know this. This is just my take on the markets, which I guess is why you watch this, because you're curious to know what I'm thinking and to see my levels. My thinking here is that Google has just been the victim of hedge funds with redemption, with forced selling thanks to their bad bets in oil and other commodities, and probably bad bets against the dollar and such. But whatever, price is truth. The stock has had some noticeable relative weakness. We took out these lows here. We had bounced off them. Now took them out. We're below the 200. And we're into some important fib levels. This got really accelerated on Friday, and I'm thinking that these levels here should be an interesting right or right out bounce. A 61.8 fib is always an important level. I had been holding my reserve for the call on how I'd play Google on earnings. If we continue down strong, I think it may set up for a bit of a bounce on earnings, for a bit of a relief rally. I have to see if it does catch itself and gets a little bit strong again, then the picture again gets a little bit less clear. But if you're already down big into the number, it takes out a lot of risk out of the equation. I'm going to be actively trading that a little bit more as we get closer to earnings. So this is just my thinking now. If we're coming weak, I want to see the condition of the market and where we are at that time before making that trade. There's no reason to put it on now. It's not like IV is going to contract before then. It's only going to increase. So I'll be playing that with options. So let's revisit that a little bit later in the week. I had discussed KORS looking like it was breaking out here. I had taken this trade here, gotten out, and then re-entered, and I actually wound up getting stopped out. This was my low below this shelf. If we can take out these bars here, I think that the trade is back on, and I'll set my entry again to give this sucker another try. But below this consolidation to me here is there's no setup anymore. It's a little bit more bearish, with the onus now on the bulls having to take out this 77.16 area and the 50-day. If that happens, I think there's some room up to the 38 too, fib, and maybe even to the halfback. But let's see. Like I said, that trade here didn't. It set up, but the setup is sort of failing here. Let's see what happens next week. But that is KORS. Like I said, it's always great having good entry to be right or right out, so you don't get hurt too badly. But this trade here is sort of not working how it's supposed to be at the moment. Netflix isn't one I've covered in a while, just because it's been a bit choppy, although it has been holding up better than the rest of the momentum trades. This is a very key area here in Netflix. It still is in a bit of a downtrend. The highs have not been higher. If you start taking out this bar, you're probably going to come somewhere into this range. And then if you lose this low here, this big reversal bar, which led to this move out of range, I would say you're probably going to come back down and test lower. You do have some fib levels in here. They become a little less important as you test them again, and then you'll be testing some more of the dominant fib levels if that's lost. So I would be actually if I were long Netflix, I would be setting stops. My first one would probably be somewhere below here, and then for sure for here, and this might even trigger a short because you'd have been coming in from a lower high and then making a lower low. So if you lose these bars here, I'm thinking short Netflix, maybe for a move down to 412. If we take out these highs here, the 467, then I'm thinking the trade might be long for a retest of the highs. So I'm sort of looking to play this both ways, actually. I'm looking for a short below here or a high up above this, really I think above this, if you could take out this dump candle, this 477, let's see, what's the high here? 467, so it's $10. Wow. I guess if you want to go small size, maybe above these highs, and then I would do the add above this bar because, in my opinion, this action up here is not enough to hold the stock back. So I would be looking for a half size entry above the downtrend above here, and then I would add above this dump candle and play for a retest of the highs and maybe even new highs. Maybe it gets the move to the 500. Again, if we break here, then I'm going to be looking for the move down to the 412. So that's the setup in Netflix. Either way, I'm sort of agnostic here with that stock. Price line I have been talking about being weak, and I've been talking about for a while now this 1087.26. And I didn't take the trade on Friday. The market internals were way too weak for me to initiate a long on a stock that has been the poster child for relative weakness. And wow, did that wind up, I had told everyone who asked me about it, I said I was not taking it. I wanted to see what happened, and wow, this thing just, it's now made a lower low. It took out this double bottom low. And my thought with Priceline is this stock is kind of in its own orbit. I mean, the thing could rally up very easily and retest this downtrend line. For me, I'm going to be looking on a bit of a longer time frame here. I do think Priceline is going to set up. I think it's been beleaguered by again, funds liquidating these big high dollar price stocks to raise cash for probably their other bad positions. Although Priceline had really had a bit of an inside move here on their earnings, and it's really not looked back. It's been really weak. I'm looking for a bit of a move a little bit lower, maybe to this trend line, this primary trend line down here, closer to 1,000, or possibly some of these fib levels, like where you had this was really an important gap. You see, came up here. This is when Priceline was first trying to get to 1,000, and you had this gap. You only made it to 994. You had a gap fill, and then it ripped, backed off here, back into range, and then kind of. The rest is history. The stock became the first $1,000 stock and kind of never looked back. I think that there's probably some price memory in here around this 50% Fibonacci level. I may try it around there for a long. If it loses there, maybe we, it's right or right out. We try for around the 61.8. But I would for sure think that if we do keep coming down in this steep manner, there's probably some price memory here. We get a bit of a long entry with a trend line and a past breakout level. I should have that drawn on the chart. I'm going to add that in right now. The high of this bar was 994.98. Really, it was 996. I remember trading this in the watching this thing trade in the after hours. Did I say it was 994.96? Let me just double check that. 98. Oops. I had been watching this thing trade in the after hours, and that was really the level. But on the 24-hour, the RTH, it's here. So this coincides well with this trend line. I think that's where we might be going. I'll be looking for a long right there, and that one I probably will take. Regardless of the market, and I think that I shouldn't say regardless of the market, but that one I would feel a little bit more comfortable taking, just because we have that confluence of events, and it's already come down so steeply. That's also the key. The trajectory of price gets unsustainable, and this one is starting to get into that just like free fall area. So if preferably the best thing with Priceline would be is if it came down there really in a straight line, and then it would really have gotten ahead of itself, and then maybe we retest for this this breakdown level. It's a buy here for a test back up to this let's just call it the 1087, maybe even pushes a little bit more into 1100 into the downtrend. So we'll see. That's my thinking with Priceline. Let's do one more, and then we're done. Tesla. Tesla has been a bit of a choppy mess, right? I had said that this is what the level that was needed to get breached here for the trade really to the upside again. This 265.60. The old high was 265, and that was sort of after this this Morgan Stanley downgrade. That was the high of the bounce. We then came down here and made lower lows. I'd never like to see that in momentum stocks. We came back up here, and now we've kind of been building a bit of a head and shoulders. Tesla did stop on a primary trend, which is important. It is a double bottom here. So if this can hold, I think that you have a really good risk reward right or right out with this 235.65 as your stop. If we violate that, where I'm really looking for for Tesla to start really generating some more support would be somewhere in the 220, somewhere between the 220s and like this 206.84 level. That would really be, if you use this as your neckline, that would be a completion of the head and shoulders. And it doesn't show on this chart. I'd have to go a little bit further out, but that was some prior highs in the stock. Let me see if I could find it for you guys. Oops, I hit the wrong button. 3 years. It was actually a little bit lower here around the 190. Yeah, somewhere between 194.5. This was this old peak, and that dollar averaged area of that 206. I think that will be some kind of real support for this stock, and you'll get a pretty decent trade back up to the upside, maybe to even test the breakdown area. And you can see earnings is coming up. So if the stock is really weak, again, I always like to do kind of the opposite. If a stock is really strong into earnings, it's not necessarily a short, although if it's really crazy into earnings, then yes. If a stock that had been really strong is very weak into earnings, and you've washed out all those weaker hands, the risk reward starts setting up. So let's we still have some a decent amount of time. I really don't like making earning calls further out because there's increase in IV that's likely going to happen. So let's just see what happens. In the meantime, I am looking for that 220-ish area, which is around the 200 MA, to be a bit of a support area. I would really like, though, this somewhere between this 206 and this 194, where the prior highs had been. That to me would be a great setup for a bounce. So with that, I'll leave you. We'll see how volatile this week is. Maybe I'll do another midweek update, although I'm kind of trying to shy away from that. If you guys let me know what you think. Let me know if you like the midweek updates. If you think they're necessary or not. If you guys like them, I'll keep doing them. If not, we'll just stick to the same old. Please follow me on Twitter. My handle is @JustinPulitzer. If you liked this video and you found it useful, please hit the like button. That always helps. And please give me some feedback. Let me know what you guys like, what you don't like, and where you think there could be room for improvement. Because I would like to keep these videos as relevant as possible and keep you guys happy. With that, have a great week. Enjoy the rest of your weekend. Let's see what the trading week brings us.